You probably think GE is a tired old brand from your grandparents' era. Light bulbs, toasters, power plants, and corporate bloat. But here's the plot twist. That version of GE doesn't exist anymore. What's left today is a lean, focused beast called GE Aerospace, and it's quietly becoming one of the most profitable aviation companies on Earth. They don't just build jet engines. They own them. For decades. Because when GE sells an engine, it's not a one-time deal. It's the start of a 20-year stream of recurring revenue from maintenance, upgrades, and long-term service contracts. One sale can turn into decades of cash flow. And here's the kicker. GE Aerospace engines power 3 out of every 4 commercial flights worldwide. So, odds are, every time you board a plane, GE gets paid. Most people have no idea this transformation even happened. They still picture that old GE, the one weighed down by endless divisions and bad headlines. But while everyone else stopped paying attention, GE quietly restructured, split off its other businesses, and kept the crown jewel: aviation and defense engines. GE Healthcare? Spun off. GE Vernova? About to be. What remains is the sharpest, most cash-generating piece of the old empire, the part that literally keeps the world flying. But the real secret sauce is their moat. This isn't a business that relies on hype or viral trends. It's built on switching costs, technical dominance, and recurring contracts. When an airline chooses GE, it's a partnership that can last longer than some marriages. They pay GE to monitor engines, replace parts, run diagnostics, and predict problems before they happen. And now, with AI-driven tools and digital twins, GE can detect issues early, saving airlines downtime and locking in even higher margins. They're even working with Microsoft and AWS to build cloud-based engine analytics. Why? Because every hour a plane is in the air, it's producing data, and GE owns that data. That means insights, efficiency, and more control over the entire ecosystem. This isn't just a wide moat, it's a fortress with its own air force. Now, let's get real for a second. Every company has a bull case and a bear case, and if you don't look at both, you're just guessing. The bull case. GE Aerospace is a compounding cash flow machine. It has built-in demand from both commercial and defense sectors, a $175 billion backlog of orders, and a growing stream of free cash flow every quarter. They control their supply chain, they're adding digital services, and they're scaling margins in both hardware and software. Flights are packed, airlines need uptime, and GE is at the center of it all. Every hour a plane flies is more money in GE's pocket. The bear case. This stock isn't cheap. The forward PE is around 50. Pricey, even for a quality name. Defense orders dipped this quarter, and if those delays stretch, growth could slow. The digital side of the business is promising, but still early. If adoption lags, the margin boost may take time to show up. And remember, this isn't a high-growth startup anymore. It's a steady compounder, not a moonshot. The takeaway? GE Aerospace isn't a flashy tech play, it's the quiet achiever. It's not the kind of business that dominates headlines, but it's the kind that dominates cash flow. You're not betting on a maybe, you're betting on consistent performance, long-term contracts, and global scale that's almost impossible to replicate. The biggest risk isn't that the company fails, it's that investors lose patience before the full story plays out. What makes this story even more interesting is how misunderstood it still is. People hear GE and think old industrial mess. Meanwhile, the company is quietly producing billions in profit, expanding margins, and building one of the strongest moats in modern industry. It's not trying to reinvent itself. It already did. Now it's reaping the rewards. So ask yourself, is this business getting stronger every quarter? Are the numbers moving up? Is its advantage growing wider? Every answer points in one direction. This is a serious business with real fundamentals. No hype, no noise, just output. The GE name might sound boring, but beneath that old label is a pure, world-class aviation engine builder that's running circles around expectations. Sometimes the best opportunities aren't loud. They're the ones hiding in plain sight, quietly compounding while everyone else chases the next big thing. If you found this breakdown useful, hit that subscribe button to MoneyQuest Broker. It really helps more people find videos like this, and it keeps us creating deep dives into companies the market keeps sleeping on. And drop a comment below. Do you think GE Aerospace is still underrated, or has the market finally caught on? This video is for educational and informational purposes only. It's not financial advice or a recommendation to buy or sell any securities. Always do your own research or talk to a licensed financial advisor before making investment decisions. GE Aerospace's performance data and statistics are based on publicly available financial reports. The content here reflects opinions and analysis, not insider information or endorsements.